When we look at Alphabet, the real issue here was a 3% miss, 3% below estimates miss when it came to YouTube ads. Is that a sign in your mind of broader weakness in the industry, or is it just simply an Alphabet problem?
I think if you look at the macro environment, inflation is definitely hitting people more than it was a few months back. We've seen that. Well, we've got clients obviously in Europe and the US, and we saw that maybe a bit earlier in Q1. We saw kind of consumer behavior dropping off a bit and performance sliding a little bit in Q1 in our European markets. But for the US, that kind of lagged a little bit into Q2. I was reading a report from McKinsey, I think, that said consumer optimism was dropping in Q2. And that kind of accounts for it, right? Because these are the people that are buying from the ads. And if people see ad performance slowing down, then the first thing they're going to do is start to cut budgets. And that's what I think we're seeing here with Alphabet. And it'll definitely be interesting to see what happens with Meta. I think their earnings are out next week. They've already kind of conditioned the market at the end of Q1. They said, their expectations were a bit lower for Q2. So it'll definitely be interesting to see what happens with Meta next week when their earnings come out too.
So Gil, in all fairness, I think you might be mastering some understatement. It's more than interesting when it comes to Meta. About 98% of their revenue comes from ads. I'm looking at Amazon. It's about 8.5% of revenue, at least last quarter. And then Apple, according to eMarketer, has a $10 billion worldwide ad revenue business. So I want to ask again, I just want to be more pointed about it. So what we're seeing from Alphabet, you're saying it may be interesting, but in your mind, is there one company, whether it's Meta, whether it's Snap, whether it's Pinterest, that you expect this is a read on, the fact that Alphabet's seeing some weakness in their ad business?
Yeah, I think Alphabet would kind of lead the market here because especially search ads are demand capture. So if the demand's not there, then they start lagging behind and then everything else follows on. So again, it'll be really interesting to see what happens with Meta, with what they say and also what they say, how they set expectations for Q3. Because this could be a case of Google is leading the market because the demand's slowing down. People are searching less for things. There's less intent behind the searches. And that's why they're seeing the ad revenues drop off a little bit. And then more kind of top of funnel heavy platforms like Meta, like Snapchat, where it's kind of almost demand creation because you're reaching people that haven't heard of the products before. They're not capturing that demand initially like search ads do. Then that could be kind of a lagging indicator there.
Let's talk a bit about your business. We mentioned some of your customers. Benetton's one of them. I haven't heard Benetton in quite a bit, actually, to be honest with you. I didn't even know it still existed. When they're coming to you and they want to buy ads, are they saying something different to you than they said last year or maybe even a quarter ago?
I think expectations have definitely been reset this year. So a lot of our clients are e-commerce. Like they were fortunate to grow over COVID when people were kind of at home bored, spending money online. And definitely the last year or so, situations got tougher for them. And maybe whereas they would have had quite high growth targets, sort of 21, 22, those kind of expectations have definitely been tempered for this year as well. And a lot of them are happy just to see any kind of growth. Not necessarily Benetton, we worked with them in the past, but a lot of clients are happy to see any kind of growth. If it's 10, 15% year on year, they're kind of happy to take that this year. People are talking about recession, like, here and there with, it's been skirted around a lot, I think, politically as well.